Hello, I'm Anna Nichols, the Director of Communications at Altair Advisors, and I'm joined today by my colleague, Katie O'Hara, the Director of Financial Planning at Altair, and we're going to go through the 2023 Financial Planning Checklist. This is a checklist that we send out at the start of every year, and what we usually tend to concentrate on are things that have changed or updates that have come about. Katie, can you start us off by telling us some of the new things that people should be looking for this year?
Absolutely, Anna. So there's certainly a number of new items that are important to pay attention to this year. So you have Secure Act 2.0 that passed in late December. This legislation makes a number of changes to the retirement planning landscape. Most notably, it pushes out the age that individuals will need to begin taking their first required minimum distributions. So starting this year, individuals who are born in 1951 to 1959 will be allowed to delay taking their first RMD until age 73. So previously this was age 72. It'll now be 73. And then for individuals born in 1960 or later, they're actually going to be eligible to delay their first RMD even further, so to age 75. And this longer deferral period, Anna, is really going to benefit individuals who don't need the money for current living expenses. The new legislation also addresses a number of other things like reducing the penalty for failing to take a required minimum distribution and increases retirement plan contribution limits, among many other things. Another item that I think is really important to point out is that the legislation does not restrict or eliminate any current Roth strategies. So as you can recall, Anna, last year, there was a lot of speculation out there that perhaps backdoor Roth contributions or Roth conversions for high income earners might be limited or prohibited altogether. This version of the legislation that passed actually did not mention any of that. So there's no elimination. And as of right now, both of those strategies are still in play for 2023.
Okay, good to know. Thanks for that summary. I know the Secure Act specifically provides some options for clients who have overfunded 529 plans, so educational funds for children and grandchildren. Can you tell us a little bit about the options and what people need to consider if they're in this situation?
Sure. So I want to start off by saying that this piece of the legislation is really exciting, but there are quite a few limitations to it. So the new legislation will allow individuals who do have these overfunded 529 college savings accounts to actually make penalty-free rollovers from the 529 account to a Roth IRA beginning in 2024. There is a number of caveats, as I mentioned. So the first one is there's a $35,000 lifetime limit. So, if you have 50,000 or 100,000 or a large amount of excess funds, you can only utilize this strategy on 35,000. And then to execute the transfer, Anna, there's a number of things that need to happen. So the 529 plan has to have been in existence for at least 15 years. And the Roth IRA receiving the funds needs to be in the name of the beneficiary of the 529 plan. Additionally, the annual transfers are going to be limited to the IRA contribution limit, so $6,500 per year in 2023, and contributions that you've made to the 529 plan within the last 5 years are not going to be eligible for rollover.
Okay, all good things to know. Are there any other key takeaways or items you want, clients to be thinking about? We're at the start of the year right now, so as they head into the spring.
Sure. So I think it's really important to additionally make note of the increased federal estate tax exemption. So in 2023, the exemption actually increased by more than 850,000 to 12,920,000. Combining that for a couple, that comes out to almost 26 million. So there's certainly opportunities to do additional gifting in 2023. And I think this is definitely something, that individuals should look into and potentially take advantage of. Not only this increase, but also just the exemption as it stands today. This 12.9 million is at a historic high. And at the end of 2025, so December 31st, 2025, that exemption amount is due to sunset, and it will revert back to $5 million indexed for inflation. So certainly something, this year and the next couple of years to look into and try to capitalize on that. Also, Anna, just given the environment that we're in right now, the rising interest rates also make certain wealth transfer strategies like charitable remainder trusts and qualified personal residence trusts more attractive than in years past. So it's really a good opportunity, be it now or at any point during this year, to really sit down with your estate planning attorney, sit down with your team of trusted advisors and discuss the goals that you want out of your estate plan, your current estate plan as it stands today, and whether or not any of these strategies make sense. Also, as we have in years past, we've prepared a list of key items to review and discuss in the first half of the year. So things like reviewing prior years' spending and savings. You thought you were going to spend XYZ or earn this. Did you hit those goals? Talking through 2023 cash flow items. If you're in a point where you're withdrawing assets, reviewing your strategy to see if it makes sense. So you can actually find a copy of this checklist. It's pretty comprehensive, goes through a lot of different topics on our website.
Yeah. All right. Well, thank you, Katie. And we appreciate you taking us through that and giving a summary there. And as she noted, the 2023 financial planning checklist is on our website. It will be emailed to clients, but it's also on our website. And that can be found under the Our Thinking tab in the menu, and specifically under the financial planning toolbox. So thanks for being with us here today, Katie, and appreciate everyone listening. Thanks.